All right, today we're going to unpack one of those truly chaotic days in the market. A day where it felt like everything was happening all at once, and it was all kicked off by just a few unexpected words.
So how did this all start? Well, it began with a sudden, really violent dive across pretty much every asset class you can think of. Stocks, crypto, you name it. It left traders and investors all asking the same simple question.
I mean, we're talking about a matter of minutes here. Major stock indexes just fell off a cliff, dropping nearly 100 points. The selling was incredibly fast and, frankly, pretty furious.
And it wasn't just stocks. At the exact same time, over in the crypto world, Bitcoin ETFs saw this staggering outflow, $470 million. It completely wiped out 4 days of steady gains in one single brutal hit.
So you've got to be wondering, what on earth was the trigger? Well, believe it or not, it all started with what everyone thought was going to be a totally boring, uneventful meeting at the Federal Reserve. A rate cut was already baked in, so it seemed like a total non-event. But then, Fed Chair Jerome Powell stepped up to the microphone for his press conference, and in a moment that I don't think anyone saw coming, he completely changed the entire narrative with a single phrase. And here's the crazy part. A reporter didn't even ask him about it. He just volunteered it. He said that while the Fed might cut rates in the fall, another cut in December was, in his exact word, unlikely.
And you can see the impact of those words right here. It was instant. The market's odds of a December rate cut just collapsed. It went from a near certainty, like 95%, all the way down to just 65% in a flash.
So that one single off-the-cuff comment, well, it wasn't a pebble in a pond. It was a boulder. It sent this massive shockwave tearing across global markets, triggering a sell-off in almost every corner of the financial world. The reaction was swift, and it was brutal. And I mean, the reaction was immediate. Stocks fell, bond prices dropped, and even gold, which is usually a safe haven, took a tumble. At the same time, the US dollar surged because, the idea of higher interest rates makes a currency way more attractive to investors.
And if you want to see where the real fear was, just look at the bond market. The yield on the 2-year government bond, which is super sensitive to what the Fed is planning short-term, jumped 10 basis points as traders just scrambled to rethink everything.
Even crypto, which often seems to march to the beat of its own drum, couldn't escape the damage. As a classic risk-on asset, it got hit hard as investors ran for safety. Bitcoin and Ethereum ETFs just bled hundreds of millions. Now, what's kind of interesting is that Solana bucked the trend with a small inflow, but the overall picture, overwhelmingly negative.
Okay, but here's where the story gets a lot more complex. Powell's unexpected comment didn't just happen in a vacuum. The market was already trying to digest 2 other massive and honestly conflicting stories at the exact same time. So just try to imagine being a trader in that moment. You've got a hawkish Fed, you've got lukewarm earnings from some corporate giants, and then you've got this sudden dose of geopolitical optimism all hitting the wires at once. I mean, what do you even do with that?
So first, you had the earnings reports coming in from some of the Magnificent 7 tech companies. And, well, it was a mixed bag. Alphabet, Google's parent, did great, but the reports from both Meta and Microsoft were seen as disappointments, and that created this undercurrent of caution about the health of the corporate world. But then, pulling in the complete opposite direction, you had this. President Trump's big meeting with China's President Xi Jinping was producing these incredibly positive statements about the trade war, about tariffs, about future cooperation. I mean, on a scale of 1 to 10, a solid 12. That is some serious optimism. So you can see the problem, right? This leaves investors and traders in a really tough spot, basically caught in the crossfire of these powerful opposing forces that are pulling the market in completely different directions. It's really like a giant tug-of-war. On one side, you've got the Federal Reserve, the most powerful central bank in the world, pulling back on stimulus. On the other side, you have this potential breakthrough in the US-China relationship that could unlock a ton of global growth. And kind of anchoring it all down in the middle is a corporate sector that's showing some real signs of strain. And this really sets up the fundamental question for where the market goes from here. Which of these massive forces is going to win out? The restrictive policy from the Fed or this new geopolitical optimism? That is the billion-dollar question that everyone is now trying to answer. For even more news, check out our Telegram channel at the link in the first comment. That's your Daily Edge. See you next time.